Now we move on to the next company, and the name is Exploits Discovery. Welcome on stage.
Thank you. My name is Rod Husband. I'm Director and CEO of Exploits. Here to tell you a little bit about our company, the typical cautionary statements and technical disclaimer language. We've got quite a unique team, well-rounded with technical expertise, with capital markets, and with some legal backup as well. I feel, and we feel, that Exploits is a very unique opportunity for investors right now. $10 million in cash and equivalents, and we trade just around $10 million right now. So we're trading at cash value. We have about 700,000 ounces on our 4 projects in Ontario and Quebec. So essentially, you're getting the gold for free if you're buying our stock. Very solid foundation, lots of room to grow those ounces. Good leadership team, high impact exploration. We're doing geophysics right now, getting ready for a winter drill program hopefully on each project, but certainly on 2 of our projects this winter. So we'll have results coming out very soon. Now I say it's a unique opportunity, and if you look at our chart, you say, what do you mean? This is our 5-year chart. And you can see that the company was formed back in 2000 in the heyday of Newfoundland. So we got investments from Eric Sprott, rode the wave up with newfound gold. In the last 4.5 years, we spent over $20 million drilling our projects in Newfoundland with very limited success. A few good holes, but the market didn't like it. Drove us down. At the end of last year, we decided that we needed to do things differently and started a rebuilding process. And you can see that in the last 6 months, the market is starting to tick us up from 3 cents to 7 cents. We look at it a little bit closer, you can see what happened. We signed an option agreement on the Ontario and Quebec properties in May and June. That was the first leg up. And then we announced the sale of our Newfoundland properties to Newfound Gold. That was the next leg up, and now the market's waiting for the results. Our plan was to monetize Newfoundland, which we did. We sold it for shares in Newfound Gold, $8.8 million in total. Those shares have appreciated, so it's more like $10 million now. That combined with our $3 million in cash gives us a good treasury. Went out to acquire new projects. We had, certain criteria that the projects needed to follow. The triangle on the right here shows what we did. We looked at 200 projects, narrowed that down to about 30, did our detailed due diligence, and so far we've signed up 4. So where we're at today, we've got cash and equivalents of about 11, trading at 10, 185 million shares out. We have no warrants. We've been fortunate enough to finance without warrants. We're slowly starting to rebuild our shareholder base and increase our prices. Our criteria that we used, we wanted mining-friendly jurisdictions, so we got Ontario and Quebec was in our wheelhouse. We signed them up. We wanted a reputable gold resource. Each of our projects has a resource. 2 of them are historical, 2 of them are 42-101, but not our 42-101. We wanted to make sure that they were reasonable valuations, and you can see we bought, each of these projects had a unique value proposition for us where they had a whole lot of work done on them already. So we inherited 29 kilometers of drilling at Fenton, 30 at Wilson, 30 at Benoit, and almost 30 at Hawkins. So to do that today, that's about $10 to $12 million worth of drilling on each property. And we wanted to make sure that each of them had upside, which they do. We're quite familiar with orogenic gold, so again, that was one of our criteria. So we looked at projects that were in the Abitibi Greenstone Belt. That's where we are today in terms of each project, how much gold they have right now, 681,000 ounces total. Great chance to re-rate, 680,000 ounces, what's that worth in the ground? Our peers trade anywhere from $50 to $80 an ounce right now. We're essentially trading at 0. We're trading at, our enterprise value is 0 because we're trading at cash value. So here's how we're going to be different than the previous explorers on these properties. We say we take a step back to move forward. So the previous operators used what we call a target approach on exploration, where they found gold in a drill hole and they just started stepping out. Then they would miss, then they would try to figure out why they missed. What we're doing is taking the whole mineral system approach, where you look for what are the key ingredients from an orogenic standpoint, from geodynamics to fertility to architecture, and then the final ingredient is preservation. You know, you may have had the environment to make gold, but it might not be there. It might have been eroded and gone. Our exploration thesis sort of bring the science back, so no one understand the key features, know what you need to look for, know what the controls on the gold are. Focus on the economics. It's not just about finding gold, is ultimately you got to be able to mine it. So where we are is in Ontario and Quebec in the Abitibi Greenstone Belt. And interesting part of Abitibi is this area down here, where you've got Val d'Or going over to Timmins has had billions of dollars of exploration, and they're still finding gold. As you go up to the northeast here, there's been less and less money spent because it gets more and more, historically it was more and more remote. But this is where the new discoveries are all coming, and you can see we've got our 3 projects in Quebec right up here. So I'll go very quickly through each project. Fenton is one of our favorites. We got high grade, 4.5 gram historic resource. Since then, there's been over 10,000 meters of drilling as well that hasn't been incorporated into resource estimate. All of that stuff was done prior to 2020. Most of it was done prior to 2017. But you can see they did a infinite EM survey in 2021, and it really lit things up for us. And this is one of the reasons that we really like this project. This is where the Fenton deposit sits, and you can see similar EM and mag anomalies all the way along here. You've got a major regional structure through here. They don't have any other structures identified because they ran the EM survey was run parallel to where these regional breaks are going to, or these cross structures are going to be. We've just completed a very detailed mag and VLF EM survey, so we hope to pick up some of these cross structures, identify how they influence the gold. We've got some targets up here. You can see almost 360 grams on 0.6 meters in a zone that was 42 over 5. So some phenomenal targets that we plan to be in drilling this winter. The next one that we have in Quebec that we really like as well because of the grade is Wilson. It's got a resource estimate that goes back to 1997. Since then, over 22,000 meters have been drilled in and around the Wilson showing here. You can see they did geophysics, the same thing. It's going in a northwest direction. Well, that happens to be the same way as the important cross structures. You can see that very little of this property has been covered with geophysics, so we're in the process right now of flying it with drone mag and VLF EM. We'll have that done in the next few days and start interpreting those results to identify additional targets. There's at least 7 other targets here. Mid-rim has some great holes as well, 65 grams over half a meter. It's all within that orogenic gold belt. Average here is 7 grams, so we know we're into some high grade. The average widths on this are 2 to 5 meters, so when we start drilling this in the winter, we expect big things. The third one is Benoit, that has had, again, quite a bit of drilling on it, over 30,000 meters of drilling. It sits just under a very shallow lake here. It's about a 15-meter deep lake. They have drilled off about 240,000 ounces right in here. They did, again, in early 2020s, they did a airborne detailed geophysical survey on this. They identified some cross structures against the major regional break here, and all of the drilling has been focused in and around this anomaly. So we have some very significant anomalies that sit on ground here that we'll get into this winter as well and drill. Our fourth project is the Hawkins project in Ontario, another fantastic opportunity. It's 60 kilometers of this deformation zone that hosts gold. It actually is the same, that deformation zone between the Tonlights and the Gabbros is what hosts Hemlo. A little bit different geology in that Hemlo has a lot more of the intrusions that are breaking up the rock. But they got in here early on and they drilled a resource at what's called the McKinnon zone, 328,000 ounces in here. We have multiple targets on the property. We're identifying a new potential fold that comes in through here. This is really interesting. It's a 19 ppm or 19 gram per ton lake sediment sample. And just to put in context, the sort of background lake sediment samples in this area are under 0.1 gram per ton. So why is that so high? There's something going on in here. We don't have the geophysics out here yet, so that's part of what our next plan is. We sent a crew out to prospect around this fold nose and see what they can come up with here. At the deposit itself, you can see that we have several areas of good grade and width that need to be followed up at depth. This deposit was announced in 2000, and then the former operator drilled 13,000 meters since then, and they've increased the depth of the mineralized envelope considerably here as well. So we've got 4 projects. There's our summary. Following the mineral systems approach, our thesis then becomes the gold is there. Our job now is to find enough tons and grade to make it economic. So we are well on our way to do that, well on our way to rebuild what we call new exploits. Near-term catalysts, we've got phase 1 results that will start coming out in the next few weeks, lead us through the fall, getting into our winter drill program that will start as soon as it freezes up, probably just after Christmas. And then we're still looking. We have that database of projects that we were looking at, and our criteria is if we can buy it cheap enough, why spend the money drilling where it's going to cost you 15 or 20 bucks? If you can buy it for 8 or 10, you're better off buying it for 8 or 10. So in terms of the Lassonde value curve, little graph that I do in terms of the risks that are associated depending on where you are, exploration, technical financing, and commodity price risk. But we have projects that are sitting down here in terms of value, and along the curve here where they're getting into resource development. So our job is to, in the next 6 to 8 months, is to drive our value back up to sort of normal levels and beyond through quality exploration. Thank you very much. If anybody has any questions. Okay, thank you.